Hello, from LPL Financial. Welcome to The Talking Point. I'm your host, Quincy Krosby.
Good morning, everyone. It's Quincy Krosby. This is The Talking Point. It's Monday morning, August 21st. Thank you for joining me. Last week was a fascinating week for the market because we had some good numbers from Walmart showing that people are spending. And more important than that, I found it very interesting in their earnings report that, yes, Americans are going in there for food, right? Including upper income folks. They've reported this for some months now, that upper income folks, household incomes, $100,000 and more, going in there and buying food because the prices in Walmart tend to be lower nationally. However, and this is my point, they are also saying that they are seeing a slight pickup in customers going in and buying some higher margin items, electronics, just to give you an example. That's interesting because over the past, maybe the past number of earnings reports, we've heard just about the food and concerns that folks were not going in and spending more, again, with these higher margin items. Also, they talked about going back to school sales. They're up, and they're up across the board, not just with Walmart. The reason I find this interesting is that early on in the summer, there was a survey that came out from a major consulting and accounting firm, saying that Americans were saying, no, prices are too high. We're holding back. And the reason that we follow the back to school sales is that they are an important harbinger for the holiday sales. And now you have to sort of maybe adjust. At the end of the day, people have been buying those back to school items and paying perhaps more because they've been saying that the prices are too high. But the competition amongst the stores, all of the chains, for example, are actually offering a number of discounts. Now, as we go into the next season, which, by the way, is extremely important to the bottom line of the big retailers, which happens to be Halloween. And we're going to share something with you about candy, Christmas candy, Halloween candy, Easter candy, you name it. They tend to come out very, very early. And you want to know the reason? The reason is that the candy manufacturers know that folks stock up on it, but then they wind up eating it. Yeah, they wind up eating it early, and then they have to go back and buy more when the holiday actually arrives. It's fascinating, right? We seem to have no control of ourselves once we buy it and think, oh, yeah, I'll hold it for the holiday. No, according to the manufacturers, that's not the case. And that's the reason you see those candies coming out and you're like, wait a minute, whoa, Valentine's Day is out, even before Christmas sometimes. So this is, I think, interesting. I learned this, by the way, from somebody who works at one of the top candy manufacturers in the world. Now, looking at last week too, there were concerns. You saw it over and over again about China, about the fact that unit trusts in their shadow banking system, those unit trusts that have payouts to wealthy people, not paying. They're not paying at all. Also, Evergrande, which is a major property developer in China, coming in for restructuring, not bankruptcy, but restructuring yet again, but doing it across the world, including in the United States. Why are they going all over the world, coming in and asking for protection as they restructure? Because they have investors from all over the world, and therefore they want it clear that they are restructuring. So there are concerns there that the property market is, continuing to deteriorate. Today, we saw that they have cut rates, but just a little bit, not as much as the market had perceived, especially for those coming in with for mortgages. The other thing with China also is, again, continuing concern that the government, Beijing, is not prepared to come in and throw more debt at the country in order to spur economic growth. We're watching it because the other thing is there's another major property developer on the cusp of defaulting on their debt. So a lot going on there. But here in the U.S., the biggest concern was that inflation was going to push up more than we had expected. That where we have the 10-year yield now, that will not be enough to control inflation. So that was another concern. So we're keeping our eye on inflation in this country and the 10-year Treasury. This week, all eyes are on Jackson Hole on the 24th. What is Chairman Powell going to say? Well, one thing we believe is that we think is that he's not going to be particularly dovish. And why? Because he doesn't want the markets to start taking off, increasing and easing financial conditions. That's not what they want to see right now. Maybe he goes neutral and keeps talking about what he always does. The Fed is data dependent, but maybe he leans more to the hawkish side because in fact, the Fed doesn't know what inflation is going to do. They hope it's coming down more quickly, but certainly the core is not coming down quick enough. It's coming down, but not fast enough. And also the economy is resilient. The labor market is resilient. And as we saw with retail sales and as we heard from Walmart, Americans continue to spend. In addition, we are just going to pay attention to his overall views about the global economy. Also, the European Central Bank is there, and we want to hear from them because they, speak, they give interviews as to what they view in terms of the next move for the European Central Bank. Expectations are we will see a 25 basis point hike from them. But will that be it? Will they go on pause? Why? Because the economy in the Eurozone is slowing. It's slowing. And can it take more of rate hikes after perhaps one more? Also, energy prices are increasing. And that, as you know, increases inflation, but also curbs spending and curbs consumer discretionary spending. Also, at this meeting, we're going to get a sense from other central bankers how they are viewing the rate hike cycle. Are they almost finished for those who are continuing to raise rates? And what do they see in terms of growth for 2024? Keep in mind that last year at Jackson Hole, and by the way, this will be on Friday, August 24th, Chairman Powell came right out and in just a few minutes told the world, you better read my lips, listen to what I am saying. We are going to be keeping our focus on reducing inflation, restoring price stability, and we're going to do it, and we're going to take it seriously. And he also, in that talk last year, same talk at Jackson Hole, Wyoming, he mentioned the 1970s and the failed policy then, in which the head of the Federal Reserve raised rates stopped, and stagflationary underpinning for the economy set in, pushing inflation up dramatically. He made a point of saying, we are not going to repeat the failures of the 1970s. The stock market, it just pulled back so dramatically in just a few minutes. We don't expect anything that severe this year because inflation is coming down, and it is coming down markedly. It's just not fast enough and perhaps not enough for the Fed. So that's going to be important, and we'll listen to whether or not we hear from some of the hawks and some of the doves on the Fed sitting there as they are interviewed by all of the business news outlets. This week, too, we'll have durable goods, which will be important. Obviously, we want to see if that's continuing. And within durable goods, we always pay close attention to, yes, the component that tells us how companies are spending. Are they spending money on capital equipment? That's going to be important because capital expenditures tell us whether or not companies feel confident enough to spend. Because if they don't, and if they're watching their bottom line, they will hold back spending. So we're going to pay attention to that. Also, we'll have existing home sales as well. Or mortgage rates are up and up quite markedly. But the fact of the matter is that many of the home builders are discounting those mortgage rates. But that's also putting pressure on them as they continue to boost sales. A lot for the market to focus on, but the global eyes are all on Jackson Hole, Wyoming on the 24th. And in terms of earnings this week, pay attention on August 23rd. Oh, yes, this is about artificial intelligence. It is about none other than NVIDIA, who was the star of second quarter, the first quarter earnings season. They are major in artificial intelligence. It will be about their guidance. Their guidance in the first quarter earnings season was absolutely remarkable. And so was their top line and obviously their bottom line. Can they repeat that? And do they see, and this is important with the guidance, a strong future and earnings potential for those companies that are active in business innovation and development as they are? This is going to be very important because artificial intelligence boosted the earnings season as we came into the second half, and it was incredibly important. And the market wants to hear from NVIDIA. They will be the star of the earnings season. That is August 23rd, and then the next day, oh yes, Jackson Hole. A lot for the market to absorb during this summer, and never forget, we're watching that 10-year Treasury yield. Take care. Have a very good week. We'll be back next week. Thank you so much.
This material was prepared by LPL Financial. It's for general information only and is not intended to provide specific advice or recommendations for any individual. There is no assurance that the views or strategies discussed are suitable for all investors or will yield positive outcomes. Investing involves risks, including possible loss of principal. Any economic forecast set forth in the podcast may not develop as predicted and are subject to change. References to markets, asset classes, and sectors are generally regarding the corresponding market index. All indexes are unmanaged and cannot be invested into directly. Index performance is not indicative of the performance of any investment and do not reflect fees, expenses, or sales charges. All performance reference is historical and is no guarantee of future results. All information referenced in the podcast is believed to be from reliable sources. However, we make no representation as to its completeness or accuracy. Securities and advisory services offered through LPL Financial, a registered investment advisor and broker-dealer, member FINRA and SIPC. Insurance products are offered through LPL or its licensed affiliates. To the extent you are receiving investment advice from a separately registered independent investment advisor that is not an LPL affiliate, please note LPL makes no representation with respect to such entity. If your financial professional is located at a bank or credit union, please note that the bank or credit union is not registered as a broker-dealer or investment advisor. Registered representatives of LPL may also be employees of the bank or credit union. These products and services are being offered through LPL or its affiliates, which are separate entities from and not affiliates of the bank or credit union. Securities and insurance offered through LPL or its affiliates are not insured by the FDIC or NCUA or any other government agency, not bank or credit union guaranteed, not bank or credit union deposits or obligations, and may lose value.